Investors skeptical of China's stimulus efforts will get more clarity this week. Officials are expected to outline more detailed policies at the country's annual Central Economic Work Conference that's set to begin tomorrow, Wednesday. Our next guest calling the scope for effective China stimulus, quote, extremely limited. Joining us now is Brian McCarthy. He's Macrolens managing principal and chief strategist. It's great to have you back on the program here, Brian. So talk to us just about the fact that you see the scope of that extremely limited. What exactly does that mean? How should investors then be anticipating how significant, or maybe lack thereof, not too significant, some of these changes will ultimately prove to be?
Right. So the market was very excited about the Politburo statement we got yesterday. They certainly have talked the talk on stimulus once again, moving from a prudent monetary policy to moderately loose, which was last seen in the wake of the global financial crisis, and talking about a more active fiscal policy as well. So again, they've said the right things, but in the past they've said the right things, they've talked the talk and failed to walk the walk. And I think that's going to once again be the case. The ultimate constraint on any stimulative policy in China will remain the currency. And while yesterday's Politburo statement did express a sentiment of moving away from the overly stability-oriented policy towards something more growth-oriented, that's what they say. If you watch what they do, they seem to continue to be very reluctant to let the market act upon the Chinese renminbi. So they've pegged their currency. Until they're willing to let go of that peg, their actual room for maneuver in terms of stimulus, which would have to involve loose fiscal policy accommodated with loose monetary policy, basically some form of QE, which we saw in the wake of our housing bust in '08, and which Japan did for many years in the wake of its housing bust. That's just simply not doable at a fixed exchange rate against a strong dollar. So I would like to see some movement in the exchange rate. That would confirm for me that they're finally prepared to walk the walk, which is a risky path. And this continues to be an authoritarian leadership that is, I think, ultimately more stability focused. So again, talk's great, but the actions I see aren't all that optimistic.
Brian, I want to pull up a chart looking at Chinese exports, as you know, up 7% from a year prior, a huge uptick there in that white bar at the end of your screen for our viewers here. You say watch what China does. Well, they're trying to get ahead of Trump tariffs with this increase in exports. Do you think that is also potentially a recognition that their own domestic consumers do not have the strength anymore to push back against any headwinds that tariffs might cause for the Chinese economy?
Right. The real problem is that imports have been consistently negative, which is reflective of very weak consumer sentiment in China in the wake of the housing bust. Of course, the exports are somewhat goosed by front loading ahead of potential tariffs. I think tariffs will be an issue with regards to China next year. So that's something they're going to have to deal with. And obviously their exports are also, running at healthy levels for the last few years, because it's the one engine of growth that they're focused on, really flooding the world with excess supply in autos and a number of other areas to try to keep some growth momentum and some, employment prospects alive in a domestic economy that is beset with the housing bust. The problem is, if you get tariffs on China, or even the threat, that tends to strengthen the dollar. It actually limits the scope for easy policy in China, because again, they're dealing with a currency peg against a strengthening dollar in an environment where that one growth engine, exports, are under threat, also the big generator of foreign currency for China. So it's an environment of currency weakness, which actually limits the scope for stimulus. So if they want to do stimulus in that environment, the cost is going to be a sharp decline in the RMB. And again, they just have not shown any willingness to go down that path. That could change, but their behavior in the day-to-day management of the RMB does not suggest there's anything like that on the cards at present.
Brian, I'm curious what you make of the NVIDIA report that we got out yesterday, just in terms of the fact that China now investigating NVIDIA, accusing NVIDIA of some antitrust practices. And I'm curious how much, from your perspective, of this is a political play versus concern about some of those antitrust issues here with NVIDIA specifically.
Sure, it's tough to say because NVIDIA obviously has become a dominant player in their space. regulators in both the US and Europe have sort of hinted at maybe looking at some things from an antitrust perspective. So there is presumably some justification there. But I think, coming on the heels of the sort of the last iteration of the Biden chip controls, which were slightly tightened last week, and anticipation of Trump coming in with maybe something more forceful in the form of tariffs, I do think it's primarily a political message. It's consistent with the political message we've gotten since the election here. Xi Jinping at the APEC meeting in November gave Joe Biden 4 red lines, which were meant to be communicated to President-elect Trump. Basically, don't mess with the CCP. We don't want to talk about human rights or Taiwan. Don't do anything to impede our development, and don't think we're going to change our system, which to my mind is a signal that they're not going to be willing to engage in negotiations like they were during the first Trump term. And I'm not sure President-elect Trump will see any point after he negotiated the phase 1 trade deal that China failed to adhere to. So it could be a fairly quick move, right through any negotiation stage to some kind of back and forth with tariffs and then whatever China has planned in terms of restricting rare earths, punishing multinational companies doing business in China, and the like. So this could heat up fairly rapidly in the new year.
Brian, 30 seconds. What company do you think is next that China will target after NVIDIA?
I think anybody who does business in China is going to be vulnerable, and they'll get the most bang for their buck with the largest, U.S. companies who can maybe they can create China can create some lobbying leverage through companies like Apple or Nike. And their hope will be they can threaten pain on those entities to try to generate some political movement in the U.S. But I think it's really going to be a tough lift, given the really bipartisan nature of the anti-China sentiment that's developed in Washington.
All right, Brian, got to leave it there. Thanks so much.
Thank you.